Hi, folks. Dan Bird here on Wednesday for a midweek update on the stock market. We had the CPI number this morning, came in as expected, below 3, 2.9%. Didn't come in at 2.8, which I thought it might, but 2.9 isn't bad. The interesting thing is not so much the number, but the reaction to the number. So I'm going to quickly take a look at what happened today, and then I'm going to go over some of the stocks that people put on the last video that we did, and take a look at those. And then also I want to ask everyone's opinion about something. So let's get started. Let me share my screen. For anyone that's interested, this is the website, breakpointtrading.net. I have a free newsletter that I put out every weekend. You just click right there to receive that, and the market update. And one thing that I did for the S&P, and I had a couple of people ask about this. I had talked before about a potential head and shoulders pattern. Hang on, let me turn on my little thing here. So we had talked last week about a potential head and shoulder. So there's a left shoulder. There was one right here, one left shoulder, right shoulder, head, with the neckline right down on this dashed line right there, if you can see it. So normally, if it breaks through that neckline, then the target is the same distance from the head, which would have put it right here. See, it blew through that and then came back up to it. But there was a larger potential one with a left shoulder there, same head. The right shoulder would have been right over here. I actually drew that in. But yesterday, we blew through that. You can see the last 2 days have been very bullish days. In fact, we're sitting right at the 50-day moving average, which is one of the reasons I think the market has kind of stalled a little bit right now, even with a good CPI number. But we'll see. And it's had quite a run just in the last week or so. So it really needs to rest, take a break. Wouldn't be surprised to see it go sideways through here. But I removed that head and shoulders because it's no longer valid. So anytime I talk about things like this, I want to make sure everyone understands that it is not a prediction. I'm not predicting that that's what's going to happen. I'm just pointing out that it's a technical pattern that sometimes completes like it did here. And if it were to complete over here, the target would have been way down here. However, it didn't. So it just kept on going up, went right through where that shoulder was, right there. So that shoulder is no longer valid. So where are we now? Well, we are now in the same kind of pattern watch of lower highs and lower lows. So here's our high right here. So there's a lower low right there. And we are sitting right at that trend line. Another reason why the market stalled today. We are literally sitting right on the trend line. So, and the 50-day moving average, both at the same time. So if it can break through both of those, that would be very positive. It would still not negate the lower low, lower high until we take out this high right here. And that's where this arrow is. So that's what I just put on the chart, that arrow. So about 55.50. For this uptrend, this overall uptrend to continue higher, we need to put in a higher high, something higher than this one. So that would be above 55.50, somewhere up in this neighborhood here. So we'll see if it can do that. We've also got the 23.6 Fibonacci level, which is right here at 5,500. So lots of work the market has to do. There's a lot of resistance that it has to get through. The first one, of course, is right here. And that test will probably be tomorrow. Will we push through it, or will we get rejected and go back down? And if we do go back down, will we make a lower low, which will be down here somewhere? Don't know. I don't know what the answer to that is. We'll just have to watch it and see. But those are the technical levels that we're watching right now. So keep an eye on those. All right. Let's also take a look at the charts page on my website. I want to look at the bottom finder for the NDX, NASDAQ 100. So this is a chart that I just put in there recently. What we're looking for are these things. You can see these vertical lines is when the bottoms were put in for these other two cyclical bear markets. There was a brief one in April, but there was a longer one last year. And this one, I've said that this might be what we're looking at doing this time. So again, we're right back at that support, that resistance level. This is the NDX, not the S&P. So that's why it's not a 50-day right there. But what we want to see is the percentage of stocks above the 50-day moving average. You can see it came down here to 20% right there and 20% right there. When that happens, then we're close to putting in a bottom. For the 200-day moving average back here, we went down here to about almost 30% back here. We went down pretty far below the 50% line here too, but not quite that far. And then the other one is the VIX. So the VIX spiked significantly higher last week, and now take a look at what it's doing. It's now not only below 20, but it's now below 17 as well. So it's back into bullish territory. So the VIX needs to stay spiked up here. The bullish percent index, you can see it came right down to the 30% line. It went below it back here and it touched it back here. So we may have put in a bottom. We have to see if this one here will turn up like it did back here. It didn't go as low as this one, but it did go lower than this one. So if that starts to move back up, that's the advanced decline line. So if more advancers come in, then that would be good as well. So was this the bottom right here? You can see that it hit the 200-day moving average. I think the jury is still out on that. We need to get through this resistance that I talked about before, the 50-day moving average and that resistance line, that diagonal resistance line from the lower highs. I'll draw it in here for the NASDAQ as well. And you can see we actually are above it today. So we're actually above the trend line on the NASDAQ, and we're above the 21-day moving average. And now we have to get through the 50-day moving average. But again, the key for this one is this previous lower high. We need to get through that right there. And that's at about 15.5. No, I'm sorry. That's at, let's see where that is. That is at 19.5. So right about 19.5 right now, we're roughly at 19,000. We need to get through that in order to resume an uptrend. That would make a new higher high instead of a lower high. So we're not out of the woods yet, but things actually are looking pretty positive. And looking pretty positive on some of the individual stocks as well. So let me take a look at some of the stocks that you folks sent me names last week. And by the way, for my subscribers, my annual subscribers, I'm doing a Zoom call this Saturday at probably 2 o'clock Eastern time. It's a interactive, I'll just open it up to anybody that's joining, answer any questions that they might want to have, answer anything about technical analysis. And then a lot of times people just want to look at particular stocks. So it's kind of like what we're doing here, except it's interactive. They can actually, put names right in there and talk about them and ask me questions, things like that. So it's actually usually a pretty interesting session. But these are the ones that folks ask me about. So I'm just going to go through them, and they're in alphabetical order right here. So I'm just going to go through them in the same order. First one is AMC. And AMC looks like it's flatlined. If I made this up, just a line instead of bars, it probably would look like a flat line. And notice what it's flatlining on. 200-day moving average. That's that dotted gray line right there. It's just following that, which was trending lower. Now it's just kind of trending sideways because the whole thing is just moving sideways with it. So, and the momentum indicators are really doing nothing up here. So this isn't showing me much. If I look at it in a different way, with actual candlesticks, still looks pretty much the same. Amazingly, the 50-day and the 50-day, 200-day, and 21-day moving average are all almost at exactly the same place right there. So that is a flatline stock. So what would I do with this? I would not get in it, first of all. And for those that are thinking about it, think of it as going to a casino and putting all your money on black. That's basically what this chart is. Could it spike up like it did here? Sure, it could. But it also could just stay right here on this flat line for months and years to come. Or it could go out of business. I have no idea. So if you want to put money into this at this point right here, it is truly just a gamble. It might do this again. It might do nothing, and it might go out of business. So that's my opinion on this one. Not one that I would play. I mean, it's great, you know, people that like these meme stocks and want to play this kind of stuff. You know, it gapped up. It started its move right here, and this will probably be one of my short squeeze alerts. So it would have given an alert right here. But what do you do the next day? Because it opened way up here. So do you buy it? Do you buy it at the end of this day and then sell it this day? Or do you see it do this on this day and then buy it at the open on the next day, thinking it's going to go even higher, only to see it come all the way back down? That's the way these things actually work. Usually this is what it looks like. A big black candle means it opened up here and it closed down here. Very difficult to trade something like this. I just, personally, I would just stay away from it. All right, let's look at the next one. CRM, Salesforce. So CRM is, it's got a short-term up signal. That's when the 5 crosses the 21 right there. So if this was on my trend model, which I'll show you in a minute, then this would have got an up signal today, short-term up signal. It got a medium-term up signal way back here, and it is still on a down long-term signal because the 50-day is below the 200. So that's not good. However, looks like it's coming alive. So the momentum starting to move higher. The longer-term momentum is moving a little higher right there. It's slightly outperforming its peers. And this momentum indicator actually went positive way back here. So overall, it looks pretty good. Now, one thing that I'll talk about this when I get to the trend models, but one thing that I look for, and I actually have a scan that scans for this every day, is when this green bar goes above the 21-day moving average. When it had been below it and then goes above it the first time. That is the time to get in, when that happens right there. So that was about 4 days ago. It's not too much further above that, but this would be the most opportune time right there. And what I do is I get in with 50% on that one, and then I wait for this, what happened today. So I would have waited 4 days to do another 25%. And then the last 25% is when the MACD line right here, the black line, moves above the 0 line. And that could happen tomorrow if this keeps moving up. So CRM in general looks pretty good. It does have resistance it has to get through right up in this area, which looks like, let's see, right about here. So that's 263, call it 264. Let's call it 265 to be on the safe side. So it needs to get through 265, which is also the top of this gap over here. It's also, let's move that down. So this gap was a pretty big gap. So it's been moving sideways inside of that gap right now. That also happens to be where the 50-day moving average is. So I think it's going to run into some trouble right through here. There's a lot of people back here that bought and saw it go down that just want to break even. So I think when it gets right up there to 264, 265 in that neighborhood, it's probably going to stall. And then we'll have to see if it can push through. We're going into a rough time of the year. I mean, we may move higher in the next couple of weeks, but September is usually the worst month of the year. So keep that in mind. And the end of October is usually where bottoms happen. But this one is just moving sideways. I expect it's probably going to continue to do that when it gets to this resistance right here, but we'll see what happens. So that's my thoughts on CRM. Next one is FMC. This is a materials specialty chemicals company, which is interesting. So earnings are all the way out, just had earnings. So earnings might probably is this, yeah, that's this green one right here. So earnings are all the way out in November. So pretty safe if you wanted to get into this. Momentum's kind of going sideways right now. It had a big move up and then it pulled all the way back again. So it's sort of consolidating through here. It's actually not doing too much because it's been in this area before as well. So not doing too much right now. If I look at the 5 and the 21, so the 5 crossed back here. So that would have been the short-term up signal. And probably somewhere back here, this bar right here might have been an early entry signal, even though it's still below the 65. But right now it's above all the moving averages, which is positive. It's not showing me any significant signs that it's going to move higher though. So I don't think you'll get an explosive move out of it. Might be just sideways. TLT, a lot of people asked about TLT. So this is the bonds. That's what it looks like with candles, lots of gaps, but it's moving higher. Momentum looks great. Money flow looks very good. I think it's likely going to continue to move higher. In fact, when rates come down in September, which I'm pretty much sure they will, I think it's going to continue to move higher on that as well. So where do you get in? That's the big question, right? So again, using this is my zoomed in view. My zoomed in view, here's where the short-term signal was right there. So you could have got in at about 92.50, 93. But it's chopped around in through here. The medium-term signal happened all the way back here. Right here where it went above the blue went above the red. So medium-term signal happened right there. So it was in a downtrend at that point, but if you had waited for this white candle for it to come up above all of these moving average lines, and you got a short-term up signal there, you're already in a medium-term up signal. So that would have been the perfect entry right there, back around 91 roughly. But what I would do now is probably, I don't know if it's going to continue to move higher from here. It very well could. So if you just wanted to jump in there, I would, set a stop probably somewhere down here on this gap support, this whole support area down here on 94. So you'd be getting in at about 98, close today at 97.89. Getting in at 98 with a stop at 94. It probably will continue to move higher, but it's maybe choppy, maybe like this as it moves higher. So just be willing to sit through that. Next one was Zevia, which I don't know anything about. It's a soft drink company. They had earnings on the 7th, so just last week, and had a big gap up yesterday. If we look at the, this is my zoomed in view. So it got the short-term up signal back here, and probably is just about to get a medium-term up signal. Yeah, medium term will come in right in here. This is a really low price stock. So again, this is gambling, playing with something like this. It was at $1 today. Went up to $1. What was the high? Opened at $1.12, made it to $1.16, came back to $1. So that's roughly a 16% move today. But if you want to play penny stocks, again, these could go anywhere. They could shoot up and they could come right back down. This is gambling. Here's the 200-day moving average right there. So it's going to have resistance all the way till there, but it looks like it's starting to make a move higher right in through here. Again, this is one that you could buy this and it could move up. Don't expect it to go to the moon. I'd be happy with a 20 or 30% move, which means if you buy it right now at $1 and it goes up here to $1.20, I would get out, depending on what all of this looks like. So the trend, the uptrend looks pretty good. The MACD line is now above the 0 line. You can see it's been below the 0 line through all of this downtrend back here. So might be just starting a move, but again, this is a gamble if you're willing to play that. So those are the ones that people ask me about. Let me now take a look at the trend models, just to show you what that's all about. And I'll look at the Magnificent Seven in particular. So the trend models basically show you the short-term, medium-term, and long-term of all of these stocks here. Magnificent Seven plus a few extras. I want to look at Oracle in particular. You can see whenever anything that changes this week gets highlighted. So you can see Apple just got a short-term up signal on Apple. We look at the chart, you can see the short-term up signal actually should have been right there. Let me refresh. Yeah, I'm going to put it in right now. So short-term up signal would be right here today when the 5 moving averages cross the 21. So Apple just got a short-term up signal today. If we look at the other ones, Netflix also got a short-term up signal yesterday. There's Netflix. So there's the signal. Here's my early entry, which is when it closes above the 21. That's an early entry. And I put those on here. I put in a zoom in model and a zoom out model. So if we look at Netflix, you can see it's been in a long-term uptrend since November of 22. And that's what this zoom out will look at. So that's a long-term trend for Netflix. This is where the long-term downtrend ended, and it went up right there. And when I put these arrows right on there, just so you can see, so this is the MACD line, one above 0 right there. That was the first warning sign that things are changing. The longer term MACD changed right there, and the ADX line moved higher right there. So this, you could have got in right there. You could have got in any one of these, but that right there is the long-term trend, and you would have stayed in for that, basically for 1.5 years or more. You'd still be in Netflix. And then if you look at the zoomed in view right here, now this gives you a much closer view, and you can see on, and I put these arrows in as well. This here is the early entry for Netflix. Would have been 4 days ago when it closed above the 21-day moving average. And the way that I do this is I would take a 50% position when that happens, take a 25%, my extra 25% when the pink crosses the blue, the short-term signal, and then the final when the MACD crosses the 0 line up here, and it confirms that it's in a new uptrend. So here was the downtrend right there. Back here, it confirmed a new uptrend here, but it would actually got a green bar right there and above the 21-day right here. So you would have basically written it all the way up. So 50, 25, and 25, but I get out of everything when it has a red arrow, an early exit signal. So that's the way that works. So these are all of the different stocks in the trend model. If we look at Nvidia, because they're coming up on earnings soon, you can see they are, it's in a short-term down and a medium-term down. It's been having a nice run, however. And in fact, it has not, let's see, 112.23. You can see the 5-day 112.23. 21-day is 112.33. So it has not yet crossed, but one more day it will. So Nvidia will get a short-term up signal tomorrow. And this one here would have been the early entry. So that was the day that it moved above the 21-day moving average. So if we zoom in on it, you can see there's the arrow right there. So that's the first day after starting to recover. It has to be a green bar, and it has to be above the 21 moving average. So it's starting to move up. The momentum indicator is crossing. The histogram is above zero, but the line is not yet. So this would have been the entry. The second buy would be tomorrow. And then the final would be when it goes above zero right there. So that's what it looks like on Nvidia. And keep in mind, Nvidia reports earnings the 28th. So we're about 2 weeks away, 14 days exactly away from earnings for Nvidia. Has a nice hammer candle. So that's a bullish sign right there as well. Doesn't mean it's going to go straight up, but it's got the 50-day right ahead of it, 120. If it can get through the 50-day, then I think it's pretty much clear sailing. It's already created a new higher high. So you can see this was a high, this was a lower high, this was a lower high, this was a lower high. This is now a new higher high. We want to see it continue to make those and see this get above zero to confirm that it is in a new uptrend. But it certainly looks that way to me. All of the momentum indicators are moving higher. The money flow down here is moving positive, both short-term and long-term. So this is a 13-day, this one down here that moves faster, and a 50-day, which is the longer one. Both of 50-day has been above the zero line, and the 13-day just moved above. So money is moving back in. This is the money flow indicator. You see money is moving back into Nvidia right now. All right, that's how the trend models work. I want to ask people's opinion, and if you could just leave a note, I'd be very interested. I have a scan that I run every day. Actually, it runs automatically. I'll show it to you. This is the result. So this is from this morning. It's a bullish on the 5 and 21 cross, but it actually is a little before that cross. It's the early signal that I was telling you about before, a green bar above the 21-day moving average. This tells me any stocks that are optionable that have done that today. And this usually happens right at the beginning of the day. So I don't necessarily buy these, wouldn't buy them right away. I'd wait till the end of the day and make sure that they are still moving higher, that they're near the top of their range, and have them pull back to the bottom of the range. But you can see the names that are in here. Now, what I'm doing and what I'm thinking about doing, and I've been thinking about having my own YouTube channel, and certainly will still be coming back with Zuber here, but I wanted to provide something of value. So I'm thinking that maybe this is the thing to do something like a daily scan and show the stocks that have hit the scan every day, and also how I track them. So this is my basically paper trading, but you could paper trade to make sure it works, or you could actually buy them. And I just started this yesterday. So you can see right now there are 7 stocks in here. All of the ones that came out today did not make the list for a variety of reasons. Either they didn't stay above their 21-day moving average by the end of the day, or they pulled all the way back, or something else happened. But these are the 3 for today that made the list. And what I do is, there was one other that made the list, and that is Zscaler. So what I would do is I would put today's date here. I'll just show you how this works. This actually should be early up. And these are the scans that I run. And let's just assume we bought it today. And the symbol is Zscaler. And then I need to know when the earnings are. So if I go back and look at Zscaler back here, I can see earnings are on September the 3rd. So if I enter that in over here, September 3rd, I can see that earnings are within 20 days, actually right at 20 days. So it's only green if it's greater than or equal to 20 days, actually just greater than 20 days. So right now this gets a red. So you can see the ones that have earnings coming up. So I want to keep that in mind, and then I can put notes over here so I can track my trades and see what's working and what's not. The other thing that I do is I use the risk calculator right here. So I'll put Zscaler in and see how I did it for the other ones for today. This is just an imaginary 100,000. I need to know what the ATR is. So when I put Zscaler in, I click the button and it shows me the chart. You can see it's at 183.98. So we're going to assume we're going to buy it at 184. And the ATR is $6.93. So we'll put $6.93 here. ATR means the average true range, or the amount that it moves in one day. And then here we said, what did we say? 184. So 184 will be our buy price. And then for the stop, we'll try 7%, and then it gives a recommendation for a stop. In this case, it's 170.14. And that's calculated just doing double the ATR, double the average range that it typically moves in. And it shows you that it's 170, and it's almost the same as the 7%. It's actually 7.5%. So I'm going to use 171 as the stop. So when I go back over here to my scan, I put my stop in here at 171. And my entry price is 184. 184. You potentially could say, I don't want to buy it now, but if it gets to X dollars, I'll buy it then. And this here is 7%. And then back on the risk calculator, it tells me how many shares I can buy. So based on that criteria, based on this stop level, based on that ATR, and using this amount in the account, I can buy 20 shares, but I'm going to start with 50% of that. So it tells me I can only buy 10. So I'll put that in here too. The 10 shares, that's half the position. And then now I'm tracking this. So I'll just continue to watch this. And if I look at the ones that I did yesterday, the first 4, we can see Crocs right there. There's the stop. So I can just, you see Crocs came down today. So it came back below its 21. So it's starting to move down. I can always move this stop up if I want to. So the next one, AVGO or Broadcom from yesterday, you can see the stops here, and this one continued to move up. So this one was bought here, went above the 21 day, and now it's up here. And as the stock continues to move up, we will continue to move the stop up until it either gets stopped out or I get a red early warning. One of the two of those things happen. Nvidia, of course, actually did make the list yesterday. You can see right there above the 21 day. So Nvidia is right there, 50%. It's almost ready to get another 25%. And the stop is here at 106. So we'll see if Nvidia can continue to move higher. But do the same thing for all of these. Here's Bristol Myers from yesterday. Now, Bristol Myers was actually a downtrend reversal. You can see on the scan right here, downtrend reversal. It's another scan that also alerts me automatically every day. So on that downtrend reversal, we got in yesterday and it pulled back a little bit today, but the stop is down here. So either it gets stopped out or it moves up and the stop moves up with it. And then only when we get a short-term or a early warning down signal, which is usually in a red bar like this, or this right here would have been an early warning right there. It goes below the 21 and it's a red bar. So you would have missed this little uptrend right here, but you would have saved yourself from all of this. So that's the way this works. And I can actually show you some that I did when I was playing around with this back here. These are different types of scans that I ran. Shows you the stocks here, shows you how close to earnings they were. The ones in red are too close. This is my notes over here. And this shows you up here in 23 trading days, 37% gain. Not only is this a good way to just track your trades, but it's a really good way to see what's working and what's not working. And also putting notes over here helps you understand what you're doing wrong. You know, why did you get in? Was it an emotional trade? Were you going by the technicals? What was the reason for getting in? So that's what I'm doing. So my question is, would this be beneficial? Do you think this is something that you guys would like to see? Would you tune into a YouTube channel that did this? So every day it would be after the close, and there would probably only be, like today, there were only 4 stocks. So it would only be 4, 2, some days there might be none. And then I'll just talk about what's happening with the market. So let me know what you think. Anyway, that's where we are today. Market looks like it's poised to try to go higher, wants to go higher, but it's got a lot of resistance to get through. And that resistance may cause it to just move sideways for a while. So keep that in mind. All right, that's it for today. Thanks everyone for watching. And my website, once again, for those that are interested, is breakpointtrading.net. Don't forget the .net. And if you want to join the Zoom call this week, this Saturday, just sign up on the homepage at the very bottom. There's 3 ways you can do it, really. $0 does not ask for a credit card. That's just to be alerted that the newsletter's available. $15 is per month. And there's a 7-day free trial if you want to try it out. And then $99 for the full year, which is very inexpensive for as much content as what you get. But either of these will qualify you to participate in the Zoom call on Saturday. All right, thanks, folks. Have a great week, and I will talk to you soon.